Hi, and welcome back to yet another exciting episode in Robinhood School of Traders. Before we begin, I will thank you, and thanks especially the Facebook for the overwhelming response which I got in last video. How Pakistani generals have fooled the public and made money and fleet. So this sort of response that really motivates me. So today's topic is none different. Each one of us is asking this question: Are we in the war, or we are in the process of peace? Or let's put it in a different context. Is war likely to happen in weeks, days, months, or we'll be in some sort of cold war? So these questions we'll try to answer with a few data points. So I'm sure together we'll enjoy. So let's see, are we into war, or we are into some sort of a cold war with a peace? So let us see. Together we will enjoy. So let us see how this. Let us see the data points. The first data which comes in our mind is FIA and DIs. Guys, if we are into war, or if these are the most sensitive customers, the FIs, right? If they feel that we are into war, then how come for the last 3 4 days after Pahalgam, they are consistently pumping money. So there's a one strong data point. And for the last, if you see from March to April, they have consistently pumped money. So this is the net purchase they have done, right? So this is a very strong data point which suggests that we might go to a cold war. The physical wars likely doesn't looks good in this as per this chart. So one data point will not give us this answer. Let us go and search few data points. Today, obviously, your FIs, your DIs pulled up money, hence this is a negative. But if you see for the last October onwards, FIs have been consistently putting money, and from March onwards, my apologies, DIs have been consistently putting money, and for March onwards, your FIs have also shown some inclination towards Indian market. So if you go to the next slide and see, Robin, if the company's Indian market is making higher highs as of now, so today I think it made some sort of profit booking, came down, it settled in the vicinity of close in the vicinity of 24 328. And if you see a dollar and Indian rupees also, so that is where we are where we had a huge concern. Our dollar right from 87 has now settled to it's a base in the vicinity of 84, though still it's on the higher end. So we have these two equation which is going in as per Indian economy. Now let's come to their Karachi index, which is Karachi 100, which is the prime index of Pakistan. This is where my last video got great response. The generals, after this Pahalgam incidents, they made their Karachi index fell in the vicinity of 7 to 8%, and they made money. After that, it is making some sort of retracement or covering. So if there hasn't been in a small iota of war or something like that, then this would have fled, because these are the people who are panic mode than compared to others, which you have seen in 61 and 71 in Kargil war also. Their index, the speed at where the index falls is at a greater pace as compared to others. So as of now, these two data point are not in contradiction that we are going to a war in a likelihood in very near term as of now. So Robin, what is video all about? So if we now look at Indian Nifty, so we can't negate the fact that Indian Nifty, what are these black and Robin? This is nothing but where the Nifty had touched 70 and crossover. See, when the Nifty has touched all-time high of 70, and see the retracement is it has given. This is the first retracement. Now, if it wanted some oxygen and moved away. Now let's go to this 3rd October 24. Nifty was in the vicinity of 75 RSI. I'm telling this is RSI figure. My apologies, RSI. So we saw a huge correction. And in the near term, over here also, if you see, in the last uh, few months ago, Nifty was at all-time highs of 72 point something. Then we saw some sort of correction. Now Nifty is trading uh, in the vicinity of 64.5. So we can't negate the fact that we need fresh oxygen. So if Nifty has to move from here and make higher highs, and touch the all-time high of 65 to 26,500, move out, then we need some sort of oxygen. That means we need some sort of pumping. So one can't negate the fact that Nifty can also have some sort of price correction. So, Robin, what is this? This is nothing but RSI histogram. It is different from your RSI 9 and histogram. So this is an indicator. Do call me if you are interested. It's a lovely indicator. Many a times it is when it acts as a laggard, but I think this is a very good indicator. RSI histogram. It is not that difference of this for RSI 14 and 9. It's a different indicator, and this is works pretty cool in intraday and for scalping also. Okay, let's move forward. Now, these are the levels of Nifty, and these are the three typical level to find support, resistance, and pivot. Classical, we have Woody's, we have Camarilla, and Fibonacci. So these are the level we can write down and jot it down as well. And if you plot the array of indicators, so we have day trend line momentum, which is vicinity of 52.4, which is some sort of neutral. Then we have RSI 14, as I told you, when it crosses 70, now settles somewhere between 64.1. So we are still in the bullish bull trend. MFI technically is nothing but money flow index, which is saying above 70. So MFI is on some sort of overbought. We have MACD, which obviously is a huge MACD. We are above this central line. Signal line is also positive. ATR is something, oscillation has come down. You can see the VIX, the candles are very timid. So ATR in the vicinity of is 300. ADX is the trend has also come down. So we get a strong trend after 25 plus. So this also you can take a note. This is something new which we have. This RSI 21, ROC of 21. So ROC is, Robin, what is nothing but rate of change. It is simply measure the acceleration. The acceleration has come down, and ROC 25. So obviously the acceleration of the Nifty has come down. Hence the candles are getting nifty and timid. So let's see how can, with this information, how can we benefit and make short-term money in swing trade. Guys, I did nothing. I simply went to my software and asked, this is thanks to daily stock charts. This will get free of cost. And this query, if you want, do write to me. I'll share it in my description box also. You'll get free of cost. So in today's EOD market, end of the market, so there are 4 stocks which are made crossed RSI 17. And in today's market we had, and this I ran only Nifty 200. I've not taken the big basket. And in today's market, there are 3 stock which are trading somewhere below 35, because when I put RSI 30, there was 0 stock in Nifty 200. So let us see, just let us brush up the stock and see, where do we have an opportunity and to how to go and scale it up. So the first stock which comes is ACC, and this is somewhere in the vicinity of 30, 35, 36, right? So we can see, if you draw a simple support resistance, ACC has a very strong support in the 1800. So one can keep the stock in for this portfolio for short term movement, and let it come. Suppose it comes down and suppose it oscillates, and then we have headroom to vicinity of 21,000. So we have swing momentum which can capture with this particular information of 18 to 20%, subject to we get some sort of indication. So one can keep this radar, but as of now, there's no indicator which is saying keep buy, but just we can keep in the radar. If this moves, then we can take it forward. I have not given a technical view. I have not taken any kind of quarterly result which has come. Okay, the next stock which is there is a very strong stock, NLC India. I have never traded this stock, but when I did a fundamental, I found this stock is also a very strong stock, and the P is very in its sector is very less. So one can keep this on radar. Very strong support in the vicinity of 200. If it fizzles down, sorry, very strong support in the vicinity of 200, and it fizzles down 185. So one can accumulate this stock in this particular range, and he can buy and buy for a minimum 250 270 kind of swing. And the sector per se is getting down, so maybe there's something wrong with the sector per se is going down. Hence one can negate the fact. One can start accumulating the stocks somewhere within 200, and if it fizzles 185. This is for long term, right? This is a very good stock, Indian Overseas Bank. Now if you see, the stock is always in a downtrend, so here the RSI will probably not work. So one can use this indicator or this somewhere very strong support in the vicinity of 32 for a target of 40. But guys, this, if you see the, if you simply draw a trend line or simply plot a guppy, you can find out none of the indicators or the technical moving averages saying that there's a price correction or there's a piercing of this line. So one can simply trade this stock with a strict stop loss. Let it come in the vicinity of 32. We will accommodate the stock for a target of 40. I'm repeating once again, this is not a stock which will obey the RSI, because the trend is, the long-term trend of the stock is absolutely negative. Now let's come to a stock which is shooted up in RSI 70. The first stock is Maruti. So Maruti, yes, we can't negate the fact one can trade the Maruti with a strict stop loss or below this candle for a target of minimum 1325. So now this thing has come. People trade stocks which have crossed RSI 70 for minimum. So if you see historically, this stock has a tendency to touch RSI in the vicinity of 80. So we can make, or we wait for the candle, or if you are a aggressive buyer, but stop loss has to be very strict, because we don't know from where the stock can move. So keep this or this as a stop loss, and you can go for a target of 1320. So risk reward ratio is 1 is to 3. The next stock is Reliance. Reliance has touched 75, is now taking some to RSI correction. It looks like a evening star doji. Not exactly the pattern, but somehow if you draw, this is making some sort of M kind of pattern. So we can wait for the stock to settle down. So to stock to make higher highs from here, it needs some sort of oxygen, as we saw in the Chambal fertilizer. It broke its all-time highs and was moving high, making higher rises. Now Mahindra and Mahindra, today in the morning it made a very good high of this particular zone, and it fizzled out. So objective of making this video is just to keep an eye on this particular simple sheet, that these are the stocks you can put in your pipeline for long term investment, and these are the stock you can also do trading, subject to you have a very strong or tight stop loss as per your appetite. I have not taken MRF because most of the people don't trade MRF, because the price is rocket high in the vicinity of 1.34 lakhs. So guys, I'm sure you must have enjoyed this particular video. If you have enjoyed the video, do subscribe to my channel, and if you have any query, do write to me. What we do, we teach here to make you earn rupees 3,000 to 4,000 on daily basis in this any sort of market. Thank you.